Everybody, today's Monday, the 13th of February 2012, and we're going to take a look at some RealTick charts here in a moment. RealTick, of course, sponsors this show on Monday evenings, so take a look at realtick.com and look at not only these charts, but a terrific trading platform. The market today, we came in today over the weekend. I'd said it looked like we would probably due for a pause or a pullback, or at least a pause here within the uptrend, and the market gapped higher here today. So that's the second time in 2 weeks that's happened, where it looked as though maybe the market was due for a little bit of a consolidation. And in fact, this longer term trend still is exerting its strength here, as we can see in the 65-minute chart. We came down to some support last week, kind of balancing right above that 133.80-ish area, and got a much quicker recovery than certainly I expected. And this is why we have to be aware of the trend on multiple time frames, whereas it looked like the light had turned yellow here on the shorter term time frame, and we were stuck below that 5-day moving average. We talked about if this market get above and hold above for more than a half hour or so, this 134.50-ish area, that the buyers would be able to reestablish dominance and take back that control. Well, we didn't make a new high, but we did kind of reestablish kind of the range, and this is going to continue to be the important level of support to hold this week, which would be about 133.70. That's kind of the number that we'll use to say as long as we can stay above 133.70, then the market is at least turning sideways here, correcting through time rather than a price pullback. And of course, again, we're above a rising 10, 20, and 50-day moving average, and have a nice uptrend still intact here. So we can look at potential resistance levels. We've spoken about that numerous times, about these levels that look like maybe they're going to offer resistance, but so far everything has been just a pause within the uptrend, and that's why the longer term, more powerful trend is something we want to be aware of. And if we're going to take shorts in a market like this, they really should be for day trades, and otherwise you're going to come in and oftentimes find out that you have a gap against you in the direction of the primary trend, which of course is higher now. So 133.70 is our main level that we want to see hold, and then about 134.50-ish just above that. If we can maintain there, then we're at least neutral to heading higher. And the NASDAQ continues its phenomenal ascent as well here. We can see that we hadn't broken the uptrend line, and this bigger level of importance at about $61.70. That's what we were talking about. We of course and we saw the intersection of that little prior support level in the uptrend line here today. We're still above it, obviously, and early on this week we want to continue to see this 62.25 level hold. Below that, we would say about $61.60, and it's kind of futile to look for the resistance when we don't really have anything here on the chart that would suggest that maybe there is a likely level, except up perhaps at about the 65 level. That might in fact be a level where resistance is found. For now, we're going to be aware of it. We're going to be aware that this market has had this uninterrupted rally. There's been not since I think December 28th maybe, someone had been keeping track of that, but certainly not this year. We haven't seen the S&P 500 down more than 1%, and it's just been a very nice steady higher highs and higher lows. So these are our more important levels, 62.25 and then about $61.70 in the NASDAQ 100. For the Russell 2000, I don't know what those messy lines were drawn over the place, but we were a little bit concerned the 82 had broken, and the 82 level had broken on Friday. This group gave us a little bit of reason for pause, I guess. But you can see here, obviously, the market has recovered nicely. We're back above this prior important, or we came down and tested this prior important level, which barely acted as resistance. But basically, this 81.30-ish level in the Russell 2000 is where we want to see this market continue to hold, and really down towards the lows from Friday at about 81 and a dime. If we can maintain above that for this week, then the benefit of the doubt continues to go to the buyers. Here we see that this little level has been an area of contention. We can see a lot of trading has occurred in there over the last week and a half, and then up through about 83 and a quarter. If the market was able to get back up above 83 and a quarter, well, then we've got to look at some of these next potential levels of resistance at 84.40, and then up in here just north of 85 at about, well, I guess you could call it about $85.80. So the market remains impressively resilient. The semiconductors still, below this low from middle of last summer back in July, and perhaps it's headed for that 35 level. But this group is another one that looked like it had the potential to be pulling back. Right now, we've still got a little bit of reason to think that you look at these semiconductors; they're clearly underperforming a little bit. They are stuck below a declining 5-day moving average and this 34.50 level. I think that for the semiconductors, we want to see them back up above and hold above that 34.50 level before we can give the benefit of the doubt back to the buyers. But on the intermediate term, that is. But of course, the daily time frame still in a very nice, healthy uptrend. It had been finding support at the rising 10-day moving average, now testing that rising 20-day moving average, and still has some room to run here. It looks like on the daily chart. So you just can't get aggressive on the short side with any of these for any period of time. The financials, of course, had also come down and looked like they were breaking some support at 1460. We had given a little bit of weight to that and said, if the market can't get back above and hold above 1460 and even this 5-day moving average, that we would want to really watch this group, that if they broke down, they could lead to bigger weakness in the broader market. But of course, they continue to hold up. We're still above this trend line. So 1450, I think, is really going to be the key level for the financial stocks to hold this week. We've got room still up towards. We're at that one level that looked like it was going to potentially become resistance at about $14.80. If we're going to power up through there, then maybe we're heading up towards about 15 and a half or so. The buyers are in control. We've got a little bit more neutrality here in the financials, but again, $14.50. If we can hold above that, we're going to say that this market is at least neutral to give the benefit of the doubt to the longer term, which the buyers are in control of. Thanks for tuning in.